Well, markets are fluctuating between positive and negative second to second as we approach the close on light volumes. Now we are joined by Jason Weisberg of Seaport Securities. Jason, we've had some mixed data out today, weaker than expected GDP from Japan, rumours of stimulus from China. But what's driving the direction of US markets?
Well, I think this vacation and the summer doldrums are what's driving the market activity right now. I mean, volumes are anemic, and I imagine as the week progresses, unless we have a real big anomaly out of some of the economic data points to come, including Walmart's earnings, I think that you're going to see volume continuing to dry up, and this will be the trend throughout the rest of the summer until everyone retrenches when they come back after Labor Day, unfortunately.
The S&P is up about 15% for the year to date. Are there any fears out there about the prospect of a correction?
Well, I'm sure there's always a fear, which in some cases works counter to what the markets do, because a lot of the times we see the markets climb a wall of worry, so to speak. I think that a pullback would be healthy, not a correction. I don't think anyone wants to see a correction, and I don't think we're going to have a full-on correction, but we will have some type of pause in the form of a pullback. But net, we should close the year out on the highs or close to them.
Okay. So when you say the prospects of a correction are slim, what's supporting the market? Is it simply the weight of money continuing to come out of bond markets into equity markets? Is there a level below which retail investors will jump back in and support the S&P, which is flirting on and off with 1700?
Well, you bring up a very good point about money coming out of the bonds as one of the driving forces in the U.S. equity market. I think earnings have been good, if not great. I think guidance has been great and better than we've seen in a long time. And I think really there's nowhere else you can really go for the type of returns that people are looking for to keep pace with the what people anticipate to be an inflationary period as rising interest rates. That aside, I think that what we can expect from equity markets is a further push forward, barring some major shift in policy from the United States government, or some real large geopolitical event that would disrupt the markets. Keeping all that in mind, we've had some big events that really have disrupted the market, shockingly so. They have had a very little impact on the markets. So I expect further growth in the valuations of all the U.S. equity indexes, and in the meantime, while we're in this world of neutrality, at least that we're in today, I guess it's safe to buy stocks that pay some form of a dividend, so at least you get paid to wait for capital appreciation.
Okay. Well, there you have it. Summer doldrums for a few weeks to come. That was Jason Weisberg of Seaport Securities, and I'm Jane Searle for The Deal.